So hi guys, welcome back to my channel. Yesterday I dropped a video and I made a promise I was going to drop another video concerning a model I was trying to explain yesterday. Yeah. So now let me walk you through that model. Now whenever you saw price purge or dump so rapidly to the extent that price was just printing series of probably black candle. Let me show you an example like this. Series of black candle like this. Can you see? Can you see this type of dumping like this? Now, most of traders will have to wait the price break structure here before they could decide of okay if price actually shifted to bullish trend. Do you get it? Now let me just show you what price will do that people face to know most times. So let me just teach you the model. Now, whenever you see price dump rapidly like this, do you get it? Now you don't expect price to don't wait for price to break structure, to break the last high that was created before the low, before you can have your change of character or you can have your bullish trend. Now, price will tend to form two models that I've actually checked out. Now, this is the first model. Now you see price do this. Price will be creating an internal break of structure like this. And this is the first model. The first model, you won't have a break of structure first like this. You discover that price tends to engineer liquidity to this V zone before breaking structure here like this. Now, this is where you will enter. You will enter at the second break of structure, this zone. Now, immediately price do this and then break structure to the upside like this and engineer liquidity down. So you will enter here. This is where your entry will be. Now, this break of structure here signifies that price will tend to price higher. So if price is doing this and it doesn't give a body candle close of break of structure like this, that means that trade is not valid. But immediately you see price break structure here like this and then engineer liquidity to this V zone, or it can be another block here, or it could be a V level. Do you get it? It could be a V level, it could be another block. Immediately price come to that zone, price will buy from there. Now that's the what? That's the first model. Now the second model, this second model, can you see that it was different from the first one? You should take note. You can just pause the video and then you can draw it on your chart or screenshot it, the first model and then the second model here. Now the second model, now you discover that price broke structure first. It broke structure here. Can you see? Price broke structure. So after this break of structure here, price came down to take this low. Can you see? Price take out this low. It serves as liquidity to this zone here. And the immediately price touched this zone, it broke another structure. It broke structure, internal structure again. Can you see? That's second break. So your entry will always be at the second break. So the other block at the second break of structure or the V level there. So you allow price to form inducements or engineer liquidity very close to it, and then you pick your entry from this zone here. Do you get it? So this is the second model. So you don't need to wait for price to come to this side to break the last high here before you start looking for your bullish confirmation or bullish setup. Do you get it? So these are the models that I use, that I trade with whenever I see a dump in the market or in any particular pay like that. It happens all over and all over again. You can check it, you can practice and check your charts so that you can see it yourself. Do you get it? Now let me show you the chart example. Now look at this GBP card. Price was dumping right from this zone here. Price was dumping from this zone here. You could see. Now, ordinarily, traders will wait. Some people will wait the price actually break above this side before they can call it probably that it has actually changed to BAL to bullish trend that they will start looking for buy. But according to the model that I just taught you now you could see from that model, now you could see price doing this. Price was coming down, follow the model. Can you see? Can you see? Then price went up. After price went up, price came down to this zone like this, and then price went up again. Can you see? Can you see? And then price came down. Can you see? Now, this particular trade, if you check it on other broker, this particular low here, it actually reached the V level, like the V level of this particular zone, but on this broker, it didn't reach there. So it was like a miss here. But since we are now actually entering at this first zone, we're actually at the break of structure. Now, price broke structure to this upside here. Now, this is the second break of structure and where we enter our trade. Now, after price broke structure the second time, and then it engineer liquidity to this zone. Can you see? Price engineer liquidity to this particular zone and use the what? Use the V level. After using the V level and then price went up, it buys. Can you see? It buys. Can you see? So that's the current price. Can you see the current price action now? It buys. So that's the model I said I was going to show you. Now you can check your chart and check for other pairs. You can see I saw one recently on gold. I saw on NZD card and so many pairs like that. So it's what it happens over and over again in charts. After you see a dump like this, then you see price tends to do is either this model or this second one. So either of the two, just study it and you will see it. You see for yourself. Uh, the model it actually works. It works all the time. Whenever market forms it, it actually work. So you can study it, study your chart, and then in fact you tend to discover another thing. You tend to discover another thing also. So study your chart and follow the pattern, and then you get it. It's very very simple. You wait for internal break of structure, and then for price to engineer liquidity to the zone that you marked for entry, that particular zone. For that second break of structure, you must wait for price to engineer liquidity to that zone so that the zone will be valid. So that's that about the model that I said I was going to explain. So if you've learned one or two, you can just give a thumb like to this video and share it with your friends, subscribe and like the video. Thank you.